Dulux Group could be listed on the Australian Stock Exchange by Monday after Orica shareholders today approved the demerger plan. If court approval is granted, Orica will split its mining division from its Dulux paint, adhesives and garden products enterprise. The CEOs of the two groups say their separation will strengthen both companies in the long term. Emma O'Sullivan reports.
Orica has decided paint and mining don't mix well, and shareholders meeting in Melbourne have overwhelmingly agreed.
Some of the product ranges aren't compatible in their market positioning.
I think that them being separate from the rest of the corporation is not a bad idea.
Cameras weren't allowed inside the meeting where a vote was held on the scheme of arrangement that will enable the demerger. Outside, the chief executives made their case.
Dulux business and the Orica business both have shown terrific performance over the past few years, in fact for many years, and even through the financial crisis. And I've got the greatest confidence in both companies going forward.
There were some questions before the final vote, with the Australian Shareholders Association concerned that Wattle will become a tougher competitor because it's now owned by US paints giant Valspar. Dulux Group CEO Patrick Houlihan, however, says the company has been going up against global competitors for years.
We've had Asian Paints and Benjamin Moore enter our market and leave. We've had PPG owning Taubmans for 3 years, and PPG are the global number 2. And we've had Nippon Paints, who are the Asian number 1 here for 2 years. And we've really performed and outperformed the market during that time.
99% of votes were for the plan, which will see shareholders receive one Dulux share for every Orica share they own.
So essentially what we're seeing here is a lot more clarity around how to value the two companies and allowing investors to choose between those sorts of entities.
Orica Chief Executive Graham Liebout says the two companies have been operating independently for some time, and the demerger will allow them to pursue their own specific growth plans.
Once the demerger happens, then that's going to be very nearly 90% of the profits of Orica will be delivered via sectors in the mining and infrastructure areas.
It's also a very, very strong business, and it perhaps has attracted a lower rating than would otherwise have been the case if it had been standalone. And now we get to focus on the mining services business, which is a very strong business going forward.
Shareholder Andrew Easton suggested the Orica executives might consider taking a pay cut, saying they'd have fewer staff and responsibilities once they let go of Dulux.
I think most board members in Australia like giving themselves pay rises, particularly if it's a hidden like this one. The fact that they're going to work harder, well, we'll wait and see.
The argument there was that perhaps the complexity of the business is decreasing. Now, the reality is that the Orica business has increased in complexity and scope.
Analyst Mark Goulopoulos says it generally takes time for shareholders to see value from a demerger.
Given current market conditions, we're expecting Dulux listing to be relatively subdued. We think this stock is valued at around $2.80 per share, but we expect it will probably list at a little bit more of a weaker price than that.
The deal still requires court approval, but it's expected Dulux will begin trading as a standalone company on Monday.